Those are the main points.
Come in.
Okay, so we're talking about retest. We know what a retest is, and we said we have from who I learned it from, we have two retests: the immediate retest, they happen immediately, that's what it means, and the rounded retest. So this is a chart showing the two types of retest I explained now, or I said. Immediate retest and a rounded retest. It's good to draw these things first, then we go to the chart. So this is your SRO line, support resistance. This is support, resistance. Price closed above it. Yes, the price came down again. Oh, I didn't put this around. Okay, yeah. This is supposed to close down. Okay, price closed above, yeah, which is correct. This is a green candle. So a green candle means your closing price is up, is higher. So price closed above this line. But what happened? Price came down again immediately. You see, it went up, but immediately it came down again. So that's why we say it's an immediate retest. This is for a bearish situation. Then for a bullish situation, price is coming down, hits the support, went up, hit support, broke support. Don't forget, it broke it. It broke it because this is a red candle, and a red candle means the closing price is below. So if this is where the closing price is, it means support has been broken. But what happened? Immediately, that support line was reclaimed. That support line was reclaimed again. So it happened immediately. So that's why it's called immediate retest of the line. So this is a bullish situation, this is a bearish situation. Now for rounded, here now you see that there's no space. There's no space here. Everything just happened quickly, no space. That's why we said no space and time in between. Now for rounded retest, price hits resistance, came back, broke it, and it went to play, but it came back again because of the magnet that is there. That magnet still caught the price, it brought it back to retest that level. Now for a bearish situation means it's going to break that level and it will continue going down. But a bullish situation, in a bullish situation, this is price, yeah, went up, came down, broke the level, it came back to retest that level and went up. So those are the two types of retest. There are two types of retest. Let's go to charts and look at it. All right, let's look at this. This is I think Bitcoin. Yeah, this is Bitcoin. This is a support line. In this support line, if we extend this line to the left like this, it's not perfect, just permit me. At this point, you agree with me that it was broken. It was broken. So, but I'm not taking this now. Let's take it. Let's assume this is where it was broken. Let's assume this is where it was broken. I want to explain rounded retest. So, discover something. You see, there's a round journey, and price came back to retest that level. That's why it's called rounded journey. And you see this space. This is what we call space. Rounded. See, so there's space in between. That's why I said in the presentation that there's space and time. This space also takes time. When you look at this is third and here is fourth. So it's more time. But for immediate retest, price broke it and immediately price went to test it again. So that's why in immediate retest there's no space and time. I just hope these things is making sense. But it's simple when we look at it from the graph. In grammar, it might be looking complex, but from the graph, it's simple, and from the chart, I mean. Simple. So we can look at live. Let's take, this is Bitcoin. Let's take a live chart. Let's take a live chart. Now this retest, those are sometimes you call them trade setup. Trade setup means it's like a trap you set for your trade. Now if I, this is a rounded retest, I've explained this. But in this part now that I highlighted, this is an immediate retest. Rounded retest. Now look at this. This is when is this? This is 5th of January 2015. If I had missed this trade, this one, when this line was broken, if I have missed it, I could wait for it here because I know price is going to come back. There's space and time in between. Don't forget, there's space and time in between a rounded retest. But it's not wise because all this action you will miss it. That's the disadvantage. You've missed all this action. So that's one of the disadvantages of a rounded retest. We said higher time frame. It's better to use higher time frame for a rounded retest. It's better to use higher time frame. They are more visible in higher time frame. So that's why those of us who were holding a coin, this is Bitcoin. This was the highest high of Bitcoin. That was 2017. That was the highest level of Bitcoin in 2017 when it was around $20,000. That's the highest level of Bitcoin. Yes. But if you look at this graph, I zoom out now. I zoom out. 2021, which is this year, when Bitcoin got to 20,000, you saw something happen. There was a resistance here. When Bitcoin got to 20,000 on the 24th of November, you see there was a resistance. Price came back, touched it again. It came back, could not close above it. The price was playing until the price broke it. And when it broke it like that, price just went to 40,000. Now, because history repeats itself, at a point in time, Bitcoin is going to come back to this 20,000. Rounded retest. It's going to come back to this 20,000 and probably go higher again. So because of rounded retest, it might happen, it might not happen anyway. But the probability is high that it's going to happen. So that's rounded retest. Now, rounded retest, like I said, they happen mostly on higher time frame. On higher time frame. For immediate retest, what example can I give? If I draw this is still a rounded retest. This one is still rounded because there's space, so it's still rounded. Retest it. It's still rounded because there's space and time in between. Immediate retest. Immediate retest, they happen in a lower time frame. So when we go to 4 hours, anything lower than 4 hours, we'll see a lot of immediate retest. I think this is one of the best examples I have so far. I'd like to move forward. So let's come to support and resistance trading tips. Number 1, use higher time frame to mark your key support and resistance levels. Higher time frames are more reliable when it comes to trading key chart levels because a large number of market participants, they pay attention to those levels. That's why you should focus on higher time frame. Remember from our last lesson, I also mentioned something about higher time frame. So higher time frames such as daily and weekly time frame. So what I do is when I want to mark a level, I go to the weekly. Let me come to my these are levels that I've marked. These are levels that have been marked. I've marked them on weekly. For instance, this one now is a weekly level. This purple one is a weekly level. If I go to the daily, these are daily levels. Now, in weekly level, I know that when price gets to that level, okay, Bitcoin has even broken this weekly level. We see it. Ignore the blue, focus on the purple. Bitcoin broke this level, but what happened? it tested it again. It came back to test it. But you see that this level now, which is a is acting as a support. Yeah, it was a resistance here. Price could not close above it. So at this level, at this point, price broke it. Price has closed above it. But price is retesting that level again. So why we focus on, even if you are trading lower time frame, try to designate or draw your levels on higher time frame, because those higher time frame, they are more powerful than the lower time frame. So you should focus on high time frame. That's one tip. Another tip is if you miss a break of a key level, wait for a pullback. Remember I told us what a pullback is. A pullback is just like a retest. So if you miss the trade of a level, you can wait for a pullback to get into the trade again. Pullback refers to a retest of a broken support or resistance line before the price continues in that direction. So pullbacks, they work because support and resistance levels, they change their roles once they are broken. So a broken support level will become a resistance level, and a broken resistance level becomes a support level in the future. I think we've explained that a lot. This is a good example. This level, this one, is acting as resistance, resisted price, price came back, resisted price again, price came back. It's acting as resistance. That's why sometimes we don't call it resistance support, we just call it a level. It's acting as resistance here, but it became a support. A support that has not been retested anyway, because we've not come back to retest that level. But if we look at this level here, this one, so we've tested this level several times. Now, putting all those things we've learned together, remember we said once a level is continuously being tested, it becomes weaker. So let me draw a level here. Let me put a level here. Okay, we've even tested 40,000. Yeah, we tested 40,000 today or yesterday. Yesterday we tested 40,000. But if you look at this level, have been tested many times. Yeah, it was tested here. It was tested here. Tested here. Tested here. Many times we've tested it. So going from the principle, this line is becoming weak. This level is becoming weaker. It's becoming weaker. So if there should be any pullback to this level, the probability is high that it will be broken. Probability is high that it will be broken. Okay, so let's look at this tip number 3. Now, please take note, we always buy support and sell resistance. I think that's the main takeaway of this whole support and resistance thing. When you have, let me go to those. Go to those. Which one? XRP. Let me check XRP. Okay, I have a lot of levels here on XRP. We always buy support and sell resistance. We always buy support line and sell resistance line. How do I mean? I'm looking for a good chart that I've annotated. Okay. So let me just take a plain one and do something afresh. This is a plain chart. So let me draw let me draw a level. This is a level. So I draw that level. Let me say I draw this level again. Now let's say price has fallen down. At this point, price could not go up. Price could not go up here. It came down. And I already know there's a support line here. What I'm going to do is I'm going to place my buy on this support line or a little bit below the support line, because we always buy support and sell resistance. So if I place a buy at this support line, what is going to happen? You see? And once I'm getting to this resistance line, I'll place my sell order at that resistance line. Yeah. Okay, so I made a buy order here. Now, you can buy, use a limit buy, set a limit buy order here. And since I've drawn this my line, then I can set my limit sell order at that line. So because the general principle, though not always, sometimes it change, I'll buy support and sell resistance. But sometimes that is not going to work because if you go and sell resistance, you sold at this level. What about here? It means you're going to miss the show. Yeah, you're going to miss the show here. But don't forget, the other principle say there's going to be a retest. Okay, and once, although I've missed this show here, which is 5%, I'm going to place another buy order at the retest. So I'm going to buy the retest of this level. So that's why I did there was something I did in this support and resistance. I just marked some areas, and that areas show me where to always buy, and where to always sell, especially when you are trading in a range. Okay, so that's what we're saying here. We always buy support and sell resistance. Inversely, on the contrary, a broken resistance. On the contrary, buy broken resistance and sell broken support. On the contrary, buy broken resistance and sell broken support. What do we mean? On the contrary, buy broken resistance. Where is the resistance? Please, those statements are very powerful. It helps a lot. Buy broken resistance. Let me go to this chart. Okay, don't forget this is a resistant line. This is a resistant line. I've sold, assuming I sold here, or I sold here because the resistance I sold here. Then I later noticed that my resistant line has been broken. On the contrary, or inversely, buy a broken resistance. So as it has been broken, what I will do, anticipating that that level will be retested again, I'm going to buy, set my buy order there. So that's what we mean by buy broken resistance and also sell broken support. Where is the support? Let me look for a support that is broken. But we can just infer the other one there. Just like you buy a broken support, you also sell a broken resistance. So a delay, sometimes you will have delayed pullback, although sometimes price pullback may not occur, or it may take longer time to occur. So there are times that, especially things like Doge, there are times that you will just, not a FOMO, but you will just buy, you might just buy, maybe you have some other indicators that you're going to check. You will just have to buy that. Imagine when this candle was developing, that was when I buy. I set a buy there at this candle. So I might just make a market order and buy immediately. Because sometimes price might not come to retest. Let's go to, okay, yeah, let's come to Bitcoin. Price might not retest that level you're thinking is going to retest. So that's why we said there might be a delay in a retest. Where is Bitcoin 20,000? When Bitcoin 20,000 was broken, when that 20,000 level was broken. Okay, look at it. This level was broken. At this time that Bitcoin broke the 20,000 level, you see it hasn't come back to test it. So somebody who is now saying, okay, yeah, we buy broken, we'll buy a retest. You will wait for the retest, it will not come. So there are times that a pullback might be delayed. So all these things, sometimes you have to, balance it. It looks like contradictory, but that's why we use other indicators too. And we also follow the news. So although sometimes price pullback may not occur, or it will take a longer time. So what happens? You are going to miss the trade. And that's why sometimes you get late to the party. But there are times too that you get late to the party is okay. Like, let's look at this. Let's say this candle broke this my zone, this my buy zone that I put here, accumulation zone. It broke it. I didn't buy. I was waiting for a retest. What happened to me? I've missed this trade. I've missed the party that happened here. That's 18%, right? Yeah, I've missed that party. And I'm waiting for a retest. So that's why I say sometimes pullback might take longer time. So all these things, we need to balance them up with other indicators. So in conclusion, but don't forget these principles, these tips, they are very key. And you will miss some trades, you will not always, and it's okay, it's fine. It's Warren Buffett that said that when they asked him about Microsoft and Google, he missed them when they started early. So he said, yeah, we miss some of them, but we don't miss all of them. So there are times that we're going to miss some trades. we need to be comfortable with it based on your risk level and your the indicators you have to use. So sometimes you can miss some trades. Sometimes you can jump into the trades immediately. So in conclusion, price structure, which is support and resistance level, you see I use structure now. Price structure, which is support and resistance level, that is often tested in the same direction, makes that structure to be weaker. It only becomes strong when or if it is broken on the other direction. So don't try to force a level. We've talked about drawing support and resistance. Don't try to be forcing levels. No, you need to, there are times that those things will just jump on you. You will just see the levels, they will jump on you. So don't try to force levels. Learn how to draw your levels and have good levels. And the high probability setup will always be clear to you. Also, high time frame levels are stronger than low time frame levels. And high time frame levels are more reliable, but they occur less frequently. So we need to balance the timing with our trading style. I will talk about time frame in the last lesson. So also, it is very possible that support levels turns to resistance after it is broken. A broken support or resistance level gets retested, but not always. So we also need to use other tools and indicators as confluence to complement all these things that we said. But let me sound something. Support and resistance, please, they are the bedrock of technical analysis. There are some traders, they don't use indicators. They only trade based on support and resistance. And that's what is called price action. Price action trading. They just look at price. They look at resistance. They draw their lines like that. And you just the same price coming back to that line. As if those lines are magnets that's pushing the money to them. So please, let's might not be able to comprehend everything now, but let's now watch the video and make some practice. And you will see how the market is just, you'll be in flow with the market. The market will just be reacting to your levels. And you will not be FOMOing into buying a coin. Sometimes when there are all these new coins that come out, what I will do, even if it's a signal, I might just go to the chart and look at it. Even if I'm hearing that, oh, the coin is mooning, the coin is this, I'll just look at the chart and try to draw levels that I'm going to buy and sell. And price will come back to those levels. You understand? So please, let's try to master this support and resistance level. And as time goes on, you can learn other indicators that can help you to complement your technical analysis skill. So we'll stop. Yeah.